Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. We are looking at Robinhood earnings. A slight miss, but it's all about the projections for next year. It did sell off. It's still above where I bought it though, so I'm happy with this. I can live with this. Expected this time of the year. They're spending a lot of money right now investing in the company, so I can live with this. This is good for me. I'm fine with it. My portfolio is still very, very green. It's not gone low enough though for me to buy any more. If it goes sort of below the sort of 850, then I might be inclined to double, but not really at this position yet. It's still good value as far as I'm concerned. We'll do a full valuation on it very shortly though, but there we go. That's where we are right now. I'm not really concerned by Robinhood. I can live with that. Portfolio is strong to carry that through, so that's not an issue for me at all. So let's get straight into Robinhood earnings. If you just joined us, we're 30 minutes away. Come into the chat, and I will share your comments on the screen. Love to hear from you. Let's get ready to rock and roll. We'll bring that over there. There's the comments coming in. Let's drop that up here, and you can leave me your thoughts with what do you think of Robinhood? Are you buying more? They are investing heavily in the company, so I'm not surprised really, but there we go. So let's welcome everybody in. Drop my comment up there. We are open to the general public at the moment. We'll go members only shortly so we can answer all our members' questions, and we will do that in a minute. We'll just start off quietly and see where we go. Welcome everybody over there on TikTok. Welcome to all of you. Thanks for being here. Interesting evening seeing Robinhood earnings go down, but that's expected really. I'm not concerned by that at all. Okay. Let's wait for the call to begin. Welcome, everybody. If you've just come on in, click subscribe or ring the bell. 29 minutes before the earnings begins. Tap the like button. Let us know you're here. Hood is back up to 940 and don't think there will be any more sell-off, in my opinion, says Jojo. I'm okay with this. I can live with it. Not a problem. We are now down at 919. No point buying it there. I'm already in at that point. I can hold my position. No point buying any more, though. If I wanted any more, I would have bought more at 919. There really isn't any point. So we shall wait to see what the earnings is all about. I can bring you some... let me get up some updated news. Have a quick look. See what I've got coming in. We've got the X1 deal. Yeah, a lot's been invested in the company recently, so it's not really surprising at all. August the 7th, question earnings call. Let me have a little look. There's the questions. We're looking at the questions just coming in from Robinhood. We'll be covering those in a minute. These are the questions. I'm just looking at the questions that have been asked by Robinhood. It's just a very slight miss. Not concerned. Good evening, Jojo S. How are you? Lovely to have you here. It's going up again now. There was no real point me buying any more. I've got it's enough. It's enough where I see it going. So I don't want to spend any more money. And as I say, I would if it went 5-10% lower. Then I would buy a discounted buy it. But I think I've got it at a low enough price to hold it. Quite happy that it's held there and gone back up now. You can see. I'll share with you my position. Look. After that drop, it's not really affected my portfolio of any concern. You can see, look, I'm still at 0.22. I'm at 919. Not worried. If you bought it higher than that, if you were buying the rally before the earnings, then you've played it wrong. But if you've already bought it at the lowest, or one of the lowest prices, it doesn't really matter. It doesn't matter at all. It's flat right now, 919. It did go slightly lower. It went as low as 903, but it's not really worth me jumping all over it for that smaller discount. If it goes down 5-10%, yeah. But other than that, I might get a discount tomorrow. Might take a couple of days for this to bed in, but not worth adding anymore. I'm fine with that. It's as if I've just bought it fresh, But anyway, let's get straight into it. Robinhood earnings. How is everyone doing tonight? Does everyone feel good? It's all good under the hood. I'm feeling optimistic about Robinhood Markets. Hopefully it will recover and slowly climb back up. Yeah, I like it. I'm not concerned with it. I like what they've done with FX, doing that deal. There's a lot of investment at the moment going on. We've got buy-ins. We've got the investment in the UK. Buybacks promised. There's all kind of good stuff around the stock. It's all good under the hood, says Sam. Elton John. Welcome everybody on TikTok this evening. Lovely to see you here. How are you? Robinhood earnings tonight. I wonder how busy we'll be tonight for the earnings. If you just come on in, tap the subscribe and also ring the bell as well. Robinhood earnings. There you go. Not that long to go, just 25 minutes. I'm excited to hear, are we finally going to get a date for the UK? Because I've got lots of people here waiting for that news. Just bought 10 Hood at 885. Never looked at this company, so I thought I'd just dip my toe to start. What's a good selling price? Well, the stock has been really beaten up. We know why. GameStop and all that saga. It got massively dumped when it IPO'd. It's never really recovered. It's very early days. We haven't really. We're waiting for after in COVID, everybody bought it, everybody got in. Then with GameStop and everything, then we had the big downturn, and now we've had a bull run, but not that amazing. A lot of the retail investors that use Robinhood have given up and stuff like that. But institutions are buying Robinhood. I love Robinhood. Many big investors love Robinhood. I use it all the time, obviously, but. It's been oversold. I believe in the innovation of the company, where it's going. I've got no issues with it at all. What's planned for the future is great. This, to me, is cheap. However, we will do. In fact, we should probably do it. We should probably do it now. Actually, as we've got people coming in, let's have a look at a bit of a review on Robinhood right now. In fact, I'll do that now. We've got 20 minutes to go. We've got a bit of time. I could actually do a bit of an analysis on Hood, actually. I've not done Robinhood yet, so let's have a look. Let's have a look at it. So, best case scenario, the price now. What is the price now? 917. 971. So this valuation I've got here for you was done at 971, not at 918. It's even undervalued 7.24%. Remember, you're always going to pay more for a stock like this. Overvaluation 24%, but that's at 971. Now we're at 11. So we're pretty. What's it come down? 7%, 24%. I'm just doing calculations. 16%. Yeah, 16% overvalued. That's okay. Looking at the stock price before I bring it to you. Revenue. Okay. All right. I'll tell you what we'll do. We will do a valuation here. We'll do a valuation of Robinhood. Once you can take off what that will sort out the decline in monthly active users and will also generate more revenue. I think so. I think it's a really good opportunity for the long term. So do I. That's why I'm owning it. I love it. When you talk about Hood, I don't even have to make no complaints. Bye. Mill City Bloods loves it. Good sir. Mill City Bloods, how are you? Cheers, Martin. Knowledge is king. Absolutely right. I like companies with numbers in their name. Hood. Goog, good in the Bay Area, Silicon Valley. Fair enough, mate. That's a good way to buy a stock. Why not? Okay, let's do it. Let's do it. We've got a review coming up then. Let's have a look. Let's have a look then, shall we? I'll do it. We've got 21 minutes to go. We'll keep the clock on if we can do that. Can we do that with this? Okay. Okay. A review of Robinhood, just 21 minutes and counting before the earnings. This is live, happening in a live show. I'm using my alpha spread. If you are one of my members, you get a lifetime discount to this service, which basically gives you my membership for free. Wait to the end of the video or look below in the description of the video, and I'll give you the links to how you can get alpha spread as a non-member and how you can get it as a member of my channel. But let's look at Robinhood. We've seen a slight drop on earnings. It's gone down a little bit, but still okay. I'm still in and I'm still up on my original investment, so I'm not concerned at it at all. Let's do a evaluation on Robinhood before the earnings. We can look at it again tomorrow, and because this was taken at the price at the closing bell, so it's dropped about 7% since then. So we know that these figures will be slightly better from a valuation point because the price is lower than it was when the bell went. So let's get straight into this review and then we can update it in the morning. So should we be buying on the earnings? We've got 20 minutes to go, so we've got to be quick. Subscribe and ring the bell and tap the like button as well to share this out if you're watching me live in the live earnings. Let's go. Let's go. Best case scenario. 28% undervaluation. In reality, we've got another 7% to add to that. So 35% undervaluation if you look at the best case. Best case will come by about the spring. No question about that. We're investing a lot in the UK and FX at the moment, and of course we've also got we've got interest rates high. When things start to stabilize in the spring and they start to come down, of course Robinhood make money from margin. I'm in margin right now, paying 8%. I've got no problem with that. When it comes down, however, it's going to drag more retail investors in who don't realize now is the time to buy, preparing for the bull run. But anyway, that's another issue. The base case, 24% undervaluation. Again, that was done before the earnings, so before the bell went. So we need to remind ourselves, actually, it's only about 17% overvaluation. And you might go, well, is that good? 17% overvalued? It is for this kind of stock. This is a forward growth stock. I'm happy to pay up to 25% overvaluation on a growth stock. Think of Tesla. It's been as high as 190, currently running around about 60% overvaluation. So we have to remember that a forward-thinking stock is going to be overvalued because it's a high growth stock, which it is, even though it hasn't grown yet. So I'm okay with that. Worst case scenario at $4.75. I don't value it down that low at all. And then, of course, it's overvalued by 51%, but we've got to take off about 7%. So gives you an idea of where that is. I don't think that's a good value though. Wall Street, give it a 28 upswing. Relative value down 29%. DCF down 73%. Intrinsic value down 51%, as I've just shown you. But these figures are down, slightly higher because it's 7% dropped after the bell, 6.8. So overall, that's relatively good. As far as I'm concerned, that's still a hold for me. Let's go on down. Valuation history. We can see the valuation. It was a nice price here, around 11.61. It's continued falling down. Remember, the intrinsic value isn't just the value of the stock. The value of the stock is what people are prepared to pay for it, not the value of the company. So, I feel now it's a good time to buy it. Absolutely, I believe so. Let's look at the fundamental analysis. This is very, very important. Again, we'll review this tomorrow after the earnings and we'll get an updated figure on this. 1.7 billion, up 11%. income is going up. Look, 1.4 billion 2022 December, March 30th 1.5 billion, and then we got June 29th 1.7 billion, and then we go into estimates, which is 1.9. So that's going to be a slight downturn because we know we've missed on earnings. However, we're growing. There'll be a slight adjustment here tomorrow, and we can look at it. Operating income 817 million, down 28%. Let's see where it is after earnings. Net income down 827 million, down 28%. Okay, operating cash flow 1.2 billion. Let's look at the balance sheet. The balance sheet, we like the balance sheet, very, very important. The balance sheet is 28.7 billion on assets, 21 billion on liabilities. As we can see, we are very cash positive with Robinhood. Very, very good balance sheet. That got a good side of the balance in the assets, not the liabilities. So there's no issue there with the balance sheet. 92% gross margin. That's what we want to see. Gross margin, 92%. That's what we like. That shows us there's a big moat around Robinhood. Plenty of cash, plenty of investments, doing okay. It's not going anywhere. It's not got any competition whatsoever. 92% gross margin. We like that. You can see operating margin down 67%. You can see that there quite clearly. All right, let's have a look down here. Profitability is 24 out of 100. 24 out of 100. Positive gross profit. Let me zoom out a little bit for you. Positive gross profit, good. Positive revenue growth forecast. The growth forecast is down, but we haven't got the earnings yet. We'll see how this changes. This was done before the earnings came out, so we're going to look again tomorrow and see, and then we can compare the deal in the morning. I'm looking to buy it 5 to 10% cheaper if it goes down, but I will reassess tomorrow when I look at these figures. That's the way to buy it. No point rushing tonight. If it goes down 10%, fine. I'll double my position. If it doesn't go down 10%, down 1 or 2%, which is kind of where we are about now, I'm going to hold and wait for tomorrow and see what the profitability score is. Solvency. This is where things get very nice for Robinhood. Plenty of cash, negative net debt, not an issue. Low DE, long-term solvency, short-term solvency, 41. It's amber, turning green. It's just about to turn green. So we like that. That's not an issue. Robinhood isn't going anywhere. So there's no issue with Robinhood going bust. Looking at the Wall Street targets, this might be a readjusted after tonight's slight miss. We'll have a look. Hood earnings 159% to $25. I can see it 4 to 6xing, so I'm in that camp. The average forecast is 28% upside. If you look at it at $9, it's 6% down, which of course is slightly different because we're already at 9.11. So actually, it's only about. In fact, there's no downside to it. There's no downside to it because we're about that price now. Looking at the chart, so that's looking okay. Let's scroll down and let's see. This is always a concern, though, but we need to be clear how much. This is the insider trading. Robinhood has no buybacks, no insider trading at the moment, no insider buying at the moment. We are selling, though. The last transaction was made November the 2nd. November the 2nd by Vlad Tenev. The CEO sold $260,000 worth of shares. Absolutely nothing. No room, no need for concern. Sounds a lot. You think, oh my gosh, November the 2nd, Vlad Tenev sold shares. Well, of course he sold shares. He's a CEO of the company. He knew that the earnings was going to be a miss. He's taken some profit and he sold. However, we need to be absolutely clear, that is an extremely small amount of shares for Vlad Tenev. If he thought the company was in trouble, he would have sold millions of shares. He has sold $260,000 of shares, which is absolutely nothing. During the last 12 months, Robinhood insiders have not bought any shares and sold 23.4 million worth of shares. This is nothing. Nothing at all. The last transaction was November the 2nd by Vlad Tenev, who sold $260,000 worth of shares. Really, that is nothing to be concerned about. I'm not at all concerned about that. We'd like to see buybacks, but we want to be in before the buybacks, all right? So that's okay. I'm not concerned about that. If we scroll down, Robinhood news, this news is a little bit out of date, so we won't cover this news just now, but we will hopefully find my reviews, because my reviews get posted below. They go here in the news next to CNBC and Wall Street. They go here. If you've seen before on Alpha Spread, my reviews get posted here, so you'll see my reviews posted here later. If we look at the sentiment over the last 90 days, things were quite green over the last 90 days, a bit of negative sentiment. Let's see how that's changed, and we'll check again in the morning. Last 30 days, it's increased. Last 7 days, it's off the scale. Today, we haven't got anything yet because it's just closed. We'll look back in the morning. So there's negative sentiment around the stock. That's why it's gone down, but we'll feed back into that tomorrow, and hopefully we'll see my review appear here tomorrow as well. All right, let's go back to the stock just now. There we go. That's what's happening right now. This is a 10 minutes before the earnings is live. This is my review before the earnings. If you join me tomorrow, we'll look at this again and revisit it. For me, I am up on the stock again now. It's not worth me buying any more at this level. I would buy more at 10% down, but I'll be looking to buy it back in the morning. So that's it from me. I hope you enjoyed that small review using Alpha Spread. If you'd like to use Alpha Spread for yourself, you can get a copy of that. I'm going to give that to you now. You can get a copy of that. And if you do get a copy of that, you can pay the full price, or you can use my referral code. Click above my head. I will give you a referral to it where you can go and get yourself a copy of Alpha Spread. But if you also click above my head and down in the description of this video, you will find my members only video, which will give you a code, and that code will give you a 10% lifetime discount. So you'll actually save money. In fact, my membership will be free. That's it from me. Thank you very much for joining me. I'll be back in the morning with an update. We are now live on the earnings. We're going to go back to it now. Hopefully you'll check out my review on Alpha Spread and here on my channel. Until then, as always, see you back in the morning. Take care of yourselves and each other. All right, that review will go out and then we'll update that tomorrow. Okay, so let's go back here a minute and let's look at the earnings with 9 minutes to go. I hope that was of some use to everybody. Sensei Crypto is here. Wonderful. Let's have a look. They also want to open EU crypto trading, which will also drive growth. Correct. Let me know if you need me to go to their offices. Zach says, "Good luck, Sensei Crypto." Now, Sensei Crypto, one of our partners, is here in the show. It's lovely to have Sensei with us. Thank you, Sensei, for joining us tonight in the chat. Sensei is running an amazing crypto challenge at the moment. You want to go and check it out. If you want Sensei's information, we are running a crypto challenge, which is $1,000 to $10,000. And I will tell you that it's looking very, very nice indeed. I'm going to share with you now Sensei's website here, and you can go and check it out. Here it is. I'll give you the link in the chat as well. There we go. This is Sensei's website. I'm just showing you a little bit of it right now because we are set for the earnings. But I want to give you the link here. Go and check it out. And there you go. And you can move that out the way a minute. At $1,000, we're at $2,180, and we've still got $605 stored in cash. That's how responsible Sensei's challenge, crypto challenge, and his knowledge actually is doing very, very well indeed. Look at that, 2,180, 2,186. And lots of my crypto is staked, earning between 5% and 10%. Thank you, Sensei, for doing a great job. Check out his links in the chat, and you can go and take advantage of that. All right, back to Robinhood. Here we go, and we'll drop that back over there again. We've got 6 minutes to go for the earnings tonight. No insider trading. Phew. There you go. Very, very little trading going on whatsoever. Yes, indeed. Okay. Now then, if you've just tuned in, we are quite quiet tonight. For some reason, Robinhood isn't a big earnings tomorrow night. Of course, it's Virgin Galactic. There's going to be a big house tomorrow night. Way over 1,000 people in tomorrow night. It's like being in a small concert hall tomorrow night, folks. Yep, 1,000 people will be here tomorrow night. That's what we predict. But right now, we've got Robinhood earnings. If you've just tuned in, subscribe and ring the bell, and of course, smash the like button. It really, really helps. We've got 24 watching and just 13 likes. Shall we get Mr. Mini-Me on the case? I think we should. Here we go. Let's get some excitement going on. Here we go. Let's have a look. We've got 23 watching. It's a very, very quiet night. Not a lot of people are that bothered about Robinhood earnings on our channel. So 23 watching. We've got 13 likes. We've probably got as many as we're going to get, really, because 50% of people can't even vote anyway because they're not signed in. So I'm going to leave that. I'd love to see it, I'd love to see it higher than that, but that's where it is. Insider trading is illegal. Yes, insider trading is, of course, illegal, but it's not illegal for Vlad Tenev, the CEO, to sell his own shares. What he can't do is share inside information. That is what is illegal. All right? Want to be absolutely clear on that. So if anyone's going, well, insider trading is illegal, insider trading means you are an insider and you have shared information about a company outside. Like Vlad Tenev rings me up and says, "Hey, Martin, I think you should buy some more shares in Robinhood because we're gonna miss on earnings and stuff like that." Well, that's insider trading. If he sells shares of his own, that's perfectly fine. Just can't tell me about it. But anyway, there you go. Anyway. All right. Just got 4 minutes to go. We are ready. We are here. We're listening in. Let me check the audio. Yeah, that's good. It's all ready. I shall mute the audio. I shall lower the volume. There we go. We're all there. I shall come back in a minute and get ready for the earnings to start. Yes, when he trades, it's not insider trading. Avoid the term. When he trades, it's not insider trading. No, but it's inside trading, though. That's what it's called when people at the company buy and sell their shares. That's exactly what it means. Anyway, let's have a quick drink. It's 2 minutes to go. All right. $2.15, slightly undersold on the RSI, as you can see. I'm not buying it. I'm not selling it. Obviously, there's no point. And 2 minutes to go before the earnings. Let's see how we go now. Just a few moments to go. 2 minutes. That typically earnings tend to be 1 or 2 minutes late. Just the way it is. Welcome, everybody. It's a quiet one, expected to be a quiet one. These always are. But that's fine. 1 minute 45 to go. So Jojo S, what term would you use it then? On our review, it says inside trading. What term would you use then? What term would you use? Because that's exactly what it is. 1 minute to go. We will clear the clock in a second as we get ready for Robinhood. Let's go through my portfolio. I'm very green in the studio today. We're up again today. Virgin Galactic is up. Tomorrow's the earnings, of course. S&P is up. Amazon's up. Apple is up. Next Year Energy is down. Not buying any more at that level. Enphase Energy, 79.20. Coca-Cola up today. I'm 3.6 up now. J&J bouncing around a little bit down. Kenvue is soaring away. Sort of taking the steam out of J&J, to be perfectly honest. Who'd have thought it? But there you go. Right, just a few seconds to go now, and we're focusing. Tesla is up tonight. Rivian is up. McDonald's is down slightly. Google is up. Microsoft is up. Walmart is up. Tesco is up. Tilray is down. No surprise. Robinhood is at 9.13. My average is 9.19. Absolutely no sense at all to buy it until it goes considerably lower. Okay, we're just seconds away now. We're listening in. Here we go. Robinhood earnings is imminent. Welcome. We've got members in 43 countries. Smash the like button. Subscribe and ring the bell. Let us know you're here. Come into the chat. Share your thoughts. And we are just about to go. Here we go. No. I thought they were going to start then. I thought, wow. That's the first earnings ever to start on time. Hang on.
Good day, and thank you for standing by. Welcome to Robinhood third quarter 2023 earnings conference call. At this time, all participants are in a listen-only mode. After the presentation, there will be a question-and-answer session. To ask a question, simply press star 11 on your telephone. You will hear a message advising your hand is raised. To withdraw your question, press star 11 again. And please be advised that today's conference is being recorded. I would now like to turn the call over to Chris Kogel, Vice President of Corporate FP&A and Investor Relations.
Thank you, Carmen, and thank you to everyone for joining Robinhood's Q3 earnings call. With us today are CEO and co-founder Vlad Tenev and CFO Jason Warnick. Before getting started, I want to remind you that today's call will contain forward-looking statements. Actual results could differ materially from our expectations, and we have no duty to provide updates unless legally required. Potential risk factors that could cause differences, including regulatory developments that we continue to monitor, are described in the press release we issued today, the earnings presentation on our investor relations website at investors.robinhood.com, our Form 10-Q filed this afternoon, and in our other SEC filings. Today's discussion will also include non-GAAP financial metrics. Reconciliations to the GAAP results we consider most comparable can be found in the earnings presentation. With that, let me turn it over to Vlad.
Thanks for the intro, Chris, and thanks to everyone for joining us today. It's been nearly 10 years since Baiju and I first launched the waitlist for Robinhood. Back then, nobody had heard of fintech. Customers were paying $7 to $10 every time they placed a trade at one of the discount brokerages, and people were generally skeptical about using their smartphones for serious financial matters. Investors were also skeptical about Robinhood's prospects as a business. They viewed the idea of us entering a highly regulated market with large entrenched competitors as a fool's errand. Even if we were to succeed in bringing our product to market, would anyone want it? The conventional wisdom at the time was that individual stock investing was dead and that all anyone needed was index funds. We spoke to nearly 100 investors before we closed our initial seed round at a $10 million valuation. Almost 10 years later, we're serving over 23 million customers in the U.S. Our surviving competitors have been forced to adopt our business model and even to adapt their user interfaces to be similar to ours. And Robinhood is no longer just a trading app. We've been rapidly evolving into a broad financial services platform serving multiple financial needs, including spending, savings, and retirement. Our ambition and the opportunity ahead of us has expanded greatly, and so it still feels like we are at the beginning of our journey. We're still number 2 in retail trading market share in the US. We're at the very early stages of expanding beyond trading, with just over $1 billion of retirement assets on our platform, out of the over $12 trillion US IRA market. We are also just now beginning to take our first steps to serve customers outside the US, where we believe the need and opportunity for innovation in financial services is even greater than it is domestically. As we continue to execute on our strategy, we believe we can grow into one of the largest and most profitable financial companies in the world. I'm excited to talk to you about our progress, but first, let's review our Q3 high-level business and financial results. It goes without saying that the macro environment of the past few years has been challenging for investors. Geopolitical tensions are continuing to increase, interest rates are at 30-year highs, and household savings are being depleted at a rapid clip. I want to explain the 3 things I look at a company level to ensure Robinhood emerges from this challenging environment stronger than ever. First, financial health. You've heard me mention over the past year that I want to ensure Robinhood is a sustainable business, not just in bull markets, but in all market conditions. Put in a lot of work to make this a reality. We had our first quarter of GAAP profitability as a public company in Q2. And in Q3, total net revenues were up 29% from a year ago. And by keeping our costs lean, we more than doubled our adjusted EBITDA margin year over year. This is all while making big investments across product, customer service, and international expansion. Second, company culture. I believe very strongly that small groups of highly motivated and talented people can out-execute incumbents with over 10x the headcount and resources. I believe we have the highest concentration of talent in the history of the company, and over the past year, we have turned the crank even more on ensuring we are hiring, retaining, and motivating the highest caliber people across all of our positions. Third, product velocity. We use a number of metrics to track this, and right now, by several key metrics, our product velocity is the highest in our recorded history. We move fast, and we've been simultaneously improving our service quality. Now, let's turn to our 2023 roadmap, which, as you know, we've organized into 3 areas: deepening relationships with our customers, innovating for our active traders, and launching new growth opportunities. Let's first talk about how we're deepening relationships with our customers. Success in this part of our strategy means that Robinhood becomes the most important financial relationship for a large portion of our customers. This will lead to a healthier and more diversified business, and you should track our progress here by Gold subscribers and net deposits. Robinhood Gold continues to be our number 1 focus in deepening relationships with our customers. Over the past year, as the environment evolved and customers were looking for new ways to save and invest, we put a lot more value in Gold by adding a 4.9% APY on uninvested cash and a 3% match on IRA contributions. As a result, subscriptions are now over 1.3 million, and growth is accelerating as we added 100,000 in Q3 alone and 240,000 over the past year. Today, 6% of Robinhood customers are Gold subscribers, and new customers are joining Gold at more than double that rate. Gold customers have tens of thousands of dollars in average assets under custody, up more than 60% year over year, and they've opened IRAs with us at 7 times the rate of non-Gold customers. As we look ahead, we want the majority of our customers to be Gold subscribers, and we're taking a number of steps to make that a reality. I'll tease one of them right now. After acquiring X1 in July, our team has been hard at work creating an awesome credit card, and we've got something special planned for Gold customers. You'll hear more about this early next year. Now, let's discuss active traders. We are laser focused on being the number 1 platform for active traders, and we track our progress here by market share. Our focus has been on systematically removing any limitation that would lead an active trader to consider using another platform, with a particular emphasis on pricing, speed, and app usability. In the past quarter, we streamlined our equities trading flow, introduced options chain customization and an option P&L simulator, and more than doubled the number of stocks and ETFs available to trade 24/5 on Robinhood 24-hour market. For our crypto customers, we've rolled out some changes to the user interface on mobile so that customers can clearly see the spreads that we offer on our crypto transactions. This makes it easier for customers to see their all-in cost of execution, compare it against other platforms, and see how great of a deal Robinhood is giving them. As we deliver for our active traders, we continue to see our market share of retail trading grow. In Q3, both our equities and options market share increased from Q2 and year over year. Let me now talk about futures. We're getting closer to unveiling our offering there, and we have been hard at work building what we believe is the best designed futures product, particularly on mobile. Competitors generate hundreds of millions of annual revenue from futures trading, so as we continue to execute, we believe we have a real opportunity to expand the market, take market share, and build a nine-figure revenue business over time. The third part of our 2023 roadmap is exploring new growth opportunities. Here, we have been laser-focused on international expansion. In the U.S. alone, we've built a business with 23 million customers that serves nearly 10% of American adults. But there are billions more potential customers across the globe, and as we serve them, we believe our business can evolve into one where the majority of our customer base is outside the U.S. in the years to come. Our approach has been to build the capabilities for international expansion organically. This allows us to scale in a capital-efficient manner while easily sharing our capabilities across multiple geos. For example, with the launch of Robinhood 24-hour market, we became the first U.S. broker to offer round-the-clock trading of individual stocks. Our customers in the UK will benefit from this and other platform enhancements, as 24-hour market will be available in the UK at launch. Two major things are happening in the coming weeks. First, we'll launch brokerage operations in the UK. We look forward to eliminating commissions in that market, just like we did in the US. Also in the coming weeks, we will launch crypto trading in the EU. Crypto benefits from a relatively clear regulatory framework in the EU, and we're excited to bring our capabilities across the pond to better serve that market. As I reflect on all that Robinhood has in front of us, I'm energized by our long-term potential to innovate for our customers, grow assets, gain market share, and continue to disrupt our industry. We're really excited about the roadmap ahead, and there's so much to do. With that, I'll turn the call over to Jason.
Thanks, Vlad. It's good to speak with everyone today. In the third quarter, we stayed focused on serving customers, growing our business, and driving long-term shareholder value. Our team continues to execute on our product roadmap while growing revenues and delivering strong operating leverage in the business. In a very different macro environment than 2 years ago, we believe we have a good shot of delivering record annual revenue in 2023. And our adjusted EBITDA this year is on track to be roughly 3 times our prior record. We're also excited to see momentum continuing to build, with growing market share of retail trading and increased customer adoption of our new products. Taking a look at new products, Robinhood Retirement has over $1 billion of AUC, and our new 3% contribution match for Gold members is making us really excited for IRA season. Securities lending enrolled nearly 400,000 customers in Q3, bringing our total to nearly 2 million customers with over $10 billion of balances. Robinhood Gold grew by 100,000 subscribers in Q3 alone, bringing the total to 1.3 million subscribers, roughly double the pace we've seen in the past few quarters and the biggest increase in over 2 years. And we're also pleased to see over 10% of withdrawals are done through Instant. So we love that our revenue drivers keep moving higher. Let's look at our business results in the third quarter. Net deposits remain strong in what is typically a seasonally slow quarter. They were $4 billion in Q3, which translates to an 18% annual growth rate. And over the past 12 months, they grew at 27%. AUC ended the quarter at $87 billion, up 34% from a year ago. While equity markets were challenging in Q3, we're optimistic that the continued strength of customer net deposits and long-term market appreciation will be a powerful tailwind to our business over time. Now let's turn to our financial results. As a reminder, last quarter we reached GAAP profitability for the first time as a public company, generating $25 million of net income or 3 cents of EPS. This quarter, we recorded a $104 million regulatory accrual for historical matters, as we previously disclosed. This led to Q3 results moving back to a loss, with net income of negative $85 million, or a loss of 9 cents per share. Q3 net income prior to this accrual would have been positive $19 million, or 2 cents per share, which would have been similar to last quarter. In Q3, we generated adjusted EBITDA margins of 29%, up 16 points from a year ago. Adjusted EBITDA was $137 million in Q3 and $485 million over the past year, which is nearly a $900 million improvement compared to our first year as a public company. So the natural question is, how do we drive profitability even higher over time? We're focused on 2 things. First, growing revenues. We want to serve more of our customers' financial needs, become number 1 in active trading, and expand internationally. Second, we want to stay lean as we scale. Our cost structure is roughly 90% fixed, which supports high incremental margins and operating leverage, and we will continue to push on our fixed costs wherever we can. So we think we have a good path to higher levels of profitability over time, and we look forward to sharing our progress as we go. Now let's review Q3 revenues. Total net revenues were $467 million, up 29% from a year ago. Revenues were down 4% from Q2, as growth in net interest revenue was offset by lower transaction revenues and seasonally lower proxy revenues. Transaction-based revenues in Q3 were $185 million, down 4% sequentially, primarily due to lower crypto volumes. Moving to net interest revenues, they were $251 million in Q3, up 7% sequentially. The increase was driven by higher interest-earning assets and short-term interest rates, partially offset by lower securities lending. Looking ahead, we are watching a couple of areas that so far in Q4 are in the lower part of their cyclical ranges. Specifically, Q4 to date securities lending activity is well below the third quarter average. Additionally, Q3 net buying was the highest level we've seen in over a year, which drove free credit balances lower in the third quarter. So far in Q4, net buying has moderated, so free credit balances have increased by a few $100 million. But if the current levels of securities lending and free credit balances continue, we anticipate Q4 net interest revenue will be roughly $20 million lower than Q3 levels. Looking beyond Q4, we have a much more constructive outlook for net interest revenue as we continue to attract customer cash and net deposits, enroll customers in securities lending, and prepare to grow our credit card business. Moving on to other revenues, they declined sequentially to $31 million in Q3 as seasonally lower proxy revenues were partially offset by growth in gold subscriptions and Sherwood Media advertising revenue. I also want to share some additional color on what we saw in October. We added another 30,000 funded accounts, and customers contributed another $1 billion of net deposits to Robinhood. Additionally, October trading volumes picked up from September. Relative to Q3 monthly averages, October options and crypto were roughly in line, and equities were about 10% below. I also wanted to note that we often see lower trading volumes in November and December around the holidays. Looking at expenses, we continue to make significant progress investing for long-term growth while driving efficiency by lowering our full-year costs from 2022 levels. Starting with adjusted OPEX, which reflects total operating expenses, less SBC and the regulatory accrual, it was $353 million in Q3, below our prior outlook range. This brings our year-to-date total to $1.06 billion, or 76% of revenues. As we invest for the long term and scale our business over time, we are focused on leveraging our highly fixed cost base to drive adjusted OpEx lower as a percentage of revenue. Reflecting on our progress year to date, we feel good about our expense discipline while continuing to invest for the long term. So in Q4, while we plan to keep driving efficiency across our business, we plan to make some targeted growth investments in marketing and product launches, including for the UK, futures, and credit card. We also anticipate some short-term elevated legal expenses related to the historical regulatory matters I mentioned earlier. Given this, we're planning for Q4 adjusted OpEx in the range of $375 to $395 million, which slightly lowers the midpoint of our full-year outlook and brings our 2023 adjusted OpEx range to $1.435 to $1.455 billion. This full-year outlook has us on track to save around $75 million from our 2022 level. Turning to share-based compensation, it was $83 million in Q3, below our prior outlook range. SBC as a percentage of revenue was 18% in Q3, down from 30% a year ago. We're managing SBC costs closely, so as we scale our business over the coming years, we're focused on driving it closer to 10% of revenue. Looking ahead to Q4, we're lowering our 2023 SBC outlook again by an additional $50 million. Our updated outlook for full year 2023 SBC is a range of $860 to $880 million, which implies a Q4 range of $70 to $90 million. Just to put that in context, if we look at the midpoint of our Q4 range on an annualized basis, that's about $320 million, which represents an annual savings of over $300 million versus 2022. And looking at dilution, prior to our Q3 share purchase, diluted shares were up 1.2% through the first three quarters, well below our initial full-year outlook of 4% or less. Now let's turn to capital management. We are focused on maintaining a strong balance sheet while deploying capital into opportunities that drive growth and shareholder value. Over the past year, we generated nearly $500 million of adjusted EBITDA, and in Q3, we deployed over $700 million to purchase 55 million shares of our stock and to acquire X1. We still finished the quarter with nearly $5.5 billion of cash and investments. We know we still have a lot of cash on hand, but in this macro backdrop, we like the balance sheet strength and optionality it provides. In closing, I'm excited about the momentum we're building and believe we have a huge opportunity ahead of us. We believe we can deliver new capabilities and enhance customer experience while producing great financial outcomes for our shareholders. With that, Chris, let's move to Q&A.
All right. Thank you, Jason. For the Q&A session, we'll start by answering shareholder questions from Say Technologies. These are ranked by number of votes. We'll pass over any questions that we already addressed on this call or in prior quarters. We'll also group together questions that share a common theme. After that, we'll turn to live questions from our analysts. So I'll kick it off with our first question from Say. I'm put two together here, and these are for Jason. Massey R asks, your stock price has been floating between $9 and $12 for over 2 years. What will it take to bring it back to the IPO price? And Feng N asks, with all these new incentives happening on Robinhood, why has Robinhood not been able to raise its stock price back to the IPO level?
Thanks for the questions. So first of all, we hear you. It feels like we've made a ton of progress, and we just haven't seen it translate yet to a higher stock price. On a macro level, interest rates are up, which generally isn't good for stock prices, and it hasn't been good for fintech companies. But we're staying focused on things that are in our control, like growing our business and driving profits higher. Over the long term, we think this is the approach that will move our share price up, and we appreciate your questions.
All right. Thanks, Jason. The next question is for Vlad. I'm going to put together two here as well. So Brent C. asks, would it be possible to add a dividend information tab? And Jeremy J. asks, we continue to ask for a dividend forecasting management tool. When will that feature come to fruition?
Yeah, thank you. We're always looking for ways to improve our customer experience. So thank you for these suggestions around dividends. I actually reached out to the team and asked them to make sure this is added to the roadmap. So it'll be done.
All right. Thanks, Vlad. The next question is from William W., who asks, the biggest thing that seems to be driving your turn to profitability is the high interest rate on your cash pile. What will be the plan to maintain profits when the Fed reduces those rates? Jason?
Yeah. So one of the nice things about our business is that it's naturally hedged for changes in interest rates. Trading revenues and interest income tend to move in opposite directions. So we think we're pretty well positioned to perform financially regardless of the rate environment. We've seen this play out over the last few years. In the lower rate environment, trading revenues were strong, but with rates moving higher, trading revenue abated some, but interest income has picked up. So at the same time, we're continuing to invest to grow our business through the cycle. So for higher rate environments, we've launched things like gold high yield as well as fully paid stock lending. And for when higher trading environments come along, it's great to see that our market share is up in equities and options as we continue to invest in our platform. So overall, we feel really good about our position regardless of what interest rates do.
All right. Thanks, Jason. The next question is for Vlad, and it's from Malcolm D., who asks, what will Robinhood do to grow market share and expand operations?
Yeah, happy to answer that. So to start with, our market share has been growing. If we look at equities and options, market share is up year over year and also sequentially for the past 3 quarters in a row. And as we look at opportunities to grow even faster, right now we can see we're winning in mobile. And we think that's great because clearly that's the fastest growing part of our industry. I think the long-term trend will continue to be more and more of the legacy brick and mortar based and web activity moving in the direction of mobile. I think it's also important to note that a couple of our key competitors are going through merger-related integrations right now. So we've got TD Ameritrade merging with Schwab and E-Trade through Morgan Stanley. And we've seen actually a lot of customers complaining about those integrations, being forced to abandon some of the user interfaces that they'd like, not really satisfied with the mobile products that they're being asked to convert to. And we've been seeing really, really healthy and growing inflows from both of those competitors. And actually right now, to accelerate that even further, we're running a 1% match on ACATS, not just into retirement accounts, but also into taxable accounts. And so we're excited to share even more value with customers through that offer. So doubling down on our leadership in mobile, and also we're continuing to expand and improve the product experience across the board.
All right. Thank you, Vlad. The next question is also for you. Todd Z. asked, what is Robinhood doing to convince long-term investors to stay and grow with Robinhood rather than transfer to other accounts when they reach a higher net worth?
Absolutely. Thank you for that question. This is a key part of our strategy. When I say deepening relationships with customers, that really starts with making sure as they grow and as their needs evolve, Robinhood is the platform for them and can serve the wide variety of the financial needs that they have. So our biggest investment and area of focus here is around Robinhood Gold. As you know, Robinhood Gold launched a competitive rate on uninvested cash, which allows customers to take advantage of the high rate environment we're in and earn a high yield on cash even when they're not investing. So right now that's 4.9% APY. And a nice bonus is you get up to $2.25 million in FDIC insurance protection. So it's actually superior to a traditional savings product that you might find at a bank in the level of protection, not to mention the yield. We recently rolled out an unprecedented 3% retirement match for Gold customers. So basically, with the new IRA contributions limits slated to increase to $7,000, that's an extra over $200 a year in bonus that you could be getting just by fully funding your retirement account, which is a deal that you can't find anywhere else. And so the sort of confluence of this is once you become a Robinhood customer, we're seeing more and more of those customers adopt gold. Once you're in gold, you get an industry-leading value and the user experience across a wide plethora of our products. So if you want to retire with us, you can't get a better deal elsewhere. If you want to generate cash, even if you're not investing it, yield on the cash, we offer that. And we're continuing to add more and more features and value in gold over time. The upshot of that is gold balances have been increasing at a very healthy rate. You've seen the progress we've made in gold subscribers. Our churn and retention, particularly of our most valuable customers, continues to improve. And we think we're just getting started. We're hard at work making this better and better. But I do think we're actually seeing our strategy paying off, and you're seeing demonstrated progress in increasing wallet share and actually creating these relationships with customers that are significantly deeper.
All right. Thank you, Vlad. The next question is for Jason from Bradley S., who asks, what can Robinhood do in order to become consistently profitable throughout each quarter?
It was great to achieve GAAP profit last quarter. It was our first time as a public company. This quarter, but for the regulatory accrual, we would have seen another quarter of GAAP profits. But looking over the long run, we're going to keep investing for growth. But we think we've got a good opportunity to invest for growth and grow revenues faster than costs, which should deliver nice leverage and profitability for the bottom line over time. We're a tech company. A vast majority, up 90% of our costs are fixed costs. And so we think we're well positioned to have high incremental margins as we grow the top line.
All right. Thank you, Jason. The next question is for Vlad. It's a two-parter. Massey R. asks, when are you going international? And Thomas B. asks, when will Robinhood come to Europe?
Great questions. The answer to both of those is basically now. So I'm excited to say we're getting really close to launching our brokerage in the UK. We should be live in the coming weeks. I'll actually be there knocking on doors in the UK, maybe not literally, but with the team for the launch. And we also announced earlier in my opening prepared remarks that we will be offering crypto trading across the pond in the EU. And that's going to come right on the heels of the UK brokerage launch. So both of these launches are exciting. They expand the addressable market of customers we can serve with our financial products. And they're really the first steps in what we see as a big opportunity for us growing the business internationally.
All right. Thank you, Vlad. That concludes our shareholder questions from Say Technologies. We appreciate our shareholders taking time to ask these questions of Vlad and Jason and look forward to more next quarter. Now I'll turn the call over to Carmen to lead Q&A from our analysts.
Well, thank you, Chris. And as a reminder, if you do have a question, simply press *11 and wait for your name to be announced. Please stand by for our first question. And it's come from Dan Dolev with Mizuho. Please proceed.
Hey, guys. Great results despite, the difficult environment. I have two questions, two quick ones. So maybe, Vlad, can you tell us, what makes you gain so much share? I know it's a difficult environment, but you guys are gaining tremendous amount of share. Can you give us some color on what makes Robinhood gain so much share? And then I have a very quick follow-up. Thanks.
Yeah, thanks, Dan. Talking about our active trader offerings, as I mentioned earlier, our goal is to be the number one platform for active traders. And we have been gaining share. You're right that I pointed out year over year, and for the last 3 quarters sequentially, we've seen our market share of options and equity transactions continue to increase. And part of that is just work that we've been doing systematically to improve the pain points that customers have for the product. More recently, you can see we've continued to make improvements in options trading. We added things that customers have been asking us for, like the ability to customize options chains and better picture their P&L. We're looking at the experience for equities trading across the board. And as we sort of, used it and dug deeply into it, we noticed that in the past, we had really optimized it toward more of a novice customer. So there was a lot of explanation for how to place different types of orders. And for someone that was more active and more of an active trader, we saw an opportunity to streamline it and reduce a lot of the unnecessary steps in the process. And we've been doing that across the board, not just in the trading flows, but across the experience. We're also turning our attention to giving more data to customers to make more informed decisions. And you're going to start to see a lot of our work there rolling out in the coming weeks. And I've got to mention also not just kind of table stakes features. We've got a ways to go to continue to close the gap, but we're leading in pricing. Obviously, for options, most of our competitors are charging 65 cents per contract. For typical trades in the hundreds of contracts, that adds up to lots and lots of money that is coming out of their pockets. And our pricing advantage is strong and continuing to drive value for us. And new innovative things that you can't find anywhere else, really, besides Robinhood. Things like Robinhood 24-hour market are also continuing to play there. And all this is adding up to the share gains that you're seeing and active trader NPS across, and that's Net Promoter Score for those that aren't familiar, across options, equities, and crypto, seeing significant gains that are just continuing to accrue.
Terrific. I do have a quick follow-up. I mean, it looks to me like Robinhood could be a great place for traders to benefit from the future Bitcoin ETF. Can you maybe talk a little bit about the opportunity if it exists?
Yeah, I think that what you're seeing is Bitcoin continuing to become attractive to more and more stakeholders as a mainstream asset for diversification. There has been a long-held thesis that it's a good inflation hedge, and obviously in a high inflation environment, people are interested in ways to diversify their exposure. Robinhood has been early to offer Bitcoin in its native form, and maybe you heard me mention in the prepared remarks that we've actually made a lot of improvements in the crypto user interface. We're showing customers the spread and their all-in cost of execution. And I think we've talked about, Dan, in the call before, how Robinhood has really, really competitive pricing, but maybe customers aren't aware of that. There's not a lot of transparency around it. So we're looking to solve that problem. We believe we have solved it. And I think that more and more customers will see just how great of a deal they're getting with their ability to diversify their portfolio into cryptocurrencies. So we want to continue to be a leader there. And I think that, we're excited about the progress we've made, and there's a lot more to do.
That's great. We're excited as well. Thank you.
Thanks, Dan.
Thank you. One moment for our next question. And it's come from the line of Devin Ryan with JMP Securities. Please proceed.
Great. Thanks so much. Hi, Vlad. Hi, Jason. How are you?
Doing great.
Hey, Devin.
Hey. So, looking forward to international launch. A lot to be excited about there. I just want to think about the opportunity, or how you guys think about the opportunity, either near or long term, to build your own market making capabilities to participate in more of the economics. And particularly as you scale the offering, I suspect that could be an opportunity, but just want to get some thoughts there. And then if that's not something that would make sense, just how you're thinking about the unit economics internationally, appreciating that trading is just going to be one part of the longer term game plan of making a relationship with customers. Thanks.
Yeah, and you're referring to international specifically when you're talking about market making?
Right now I am, yes.
Yeah. Look, I think our focus right now, there's obviously lots and lots to do in our business. As you pointed out, there's all the stuff we're doing on the consumer side to win in active trading. There's obviously ways to leverage that infrastructure that we're building to process our customers' trades as a B2B offering, and market making is kind of in that category. Where we stand now is we're just laser focused on consumer. We want to make sure we're the best consumer offering out there, particularly internationally where we're kind of new to market. We want to make sure that as many of our resources as possible are pointed towards product market fit of the consumer offering. And there's lots of ways that we can monetize. Gold subscription, you've heard that product we have a lot of confidence in, and it's just in the early stages. We think that it can be just as powerful, if not more so, in the UK. Securities lending and other interest-based revenues. So yeah, we're not really focused on diversifying into B2B or market making for the near term, but it's obviously something we're familiar with. Once we start getting to the point where that makes sense as a priority, we'd certainly be open to considering.
Okay. Thanks, Vlad. And then just to follow up here on X1 and the kind of the credit card strategy, appreciate the new interest disclosure around cards. And so just love to maybe hear a little bit more about the scaling strategy of X1's business across Robinhood and kind of timeline that you guys are thinking. And then also maybe on the other side, whether there's any consideration of growing a little bit slower just to get some data around customer behavior and also just thinking about potential for credit risk as well. Thanks.
Yeah, I'll be happy to field that. I think we're going to build a great product. We actually just reviewed and approved the final designs for what's going to become the Robinhood credit card last week. So we've been making good progress. The team is super motivated to launch it. And we do anticipate there will be a period of learning. Of course, X1 has had some data from their customer base, but we anticipate once we release this new product, the scale of Robinhood's customer base is much bigger, and so we'll want to make sure that we're rolling it out prudently. But the thing that I'm most excited about is you guys seeing it, customers seeing it. I think we've spent a lot of time getting the user experience and the design just right, and I think you're really going to love it.
All right, terrific. I'll leave it there. Thanks.
Thank you. One moment for our next question. It comes from the line of Steven Chubak with Wolfe Research. Please proceed.
Hey, good afternoon. This is Michael Anagnostakis on for Steven. Maybe just one for Jason here on expense. You had noted that you will continue to be disciplined on the expense front. You highlighted the largely fixed expense base. As we think about expense beyond 23, what do you see as a reasonable core expense growth rate to sustain that 20% growth, organic growth that you've consistently delivered recently? Thank you.
Yeah, thanks, Michael. Appreciate the question. We've made a ton of progress on operating costs and running lean and driving for productivity and efficiency across our platform over the last year and a half. And I'd say that we're not done. We've got more work to do there, to be even more efficient and more lean in the way that we operate. That said, we're going to continue to invest for growth. We see a lot of opportunity ahead of us than behind us in terms of the business, including international. So we're going to place some smart investments in a number of areas. I'm sure you can appreciate this is the time of year when the teams are huddled doing 2024 planning. So it's a bit early for me to comment specifically on the growth rate we expect to see on OpEx next year, but you should expect that over a longer horizon, our intention is to grow revenue faster than OpEx, and we think that there's even while making investments, there's opportunity for us to be lean in the way that we manage our costs.
Great, thanks. And then my follow-up, I just wanted to touch on crypto again here. We've seen some stronger performance in Bitcoin and Ethereum, for example. but the volume trends have remained pretty subdued, both industry-wide and at Robinhood. But can you speak to what's driving that divergence there, and what do you think needs to happen for activity to pick back up in crypto? Thank you.
Yeah, I think it's hard for me to speculate on activity predictions in the broader cryptocurrency market. I can tell you what we're focused on. We're focused on using this as an opportunity to build our capabilities, build the platform. You've heard me talk in this call about how we want to make sure customers who are using Robinhood for crypto know that they're getting terrific pricing. And so we've continued to make progress there. We are improving the customer experience, and the team is hard at work launching in the EU, which will expand the addressable market of customers that we serve by hundreds of millions. So we're excited about that. We're going to continue to innovate and improve the offering in the space. I think there's lots of promising signs. Lots of people are spending time building the industry. We're going to continue to be a leader there.
I think the one thing that I'd add is I think it'd be helpful, to continue to get some regulatory clarity in the various markets that we're going to be operating in, and that'll allow us to innovate even faster.
Thank you for taking my questions.
Thank you. One moment for our next question, please. It's from the line of Michael Cyprys with Morgan Stanley. Please proceed.
You there, Mike?
Mike, please check your mute button, please. All right, please rejoin using the Call Me feature. One moment for our next question. It comes from the line of John Todaro with Needham. Please proceed.
Great. Thanks for taking my question. Vlad, you mentioned earlier that the EU had a clearer regulatory framework around crypto in the U.S. I'm just trying to understand in that context what kind of products or services that you could tangibly point to there. Would you envision kind of more assets for trading in the EU than the U.S.? Just anything that we can kind of tangibly look to?
I really don't want to get ahead of the launch that's coming in a couple of weeks and tell you what the value props are going to be. But yes, in general, we do expect, given the clarity, to be able to offer a different set of assets and capabilities in Europe as in the U.S.
Okay, thanks for that. And I guess just quickly, if I can add another one on, taking the other side of that and looking at the U.S. market, you guys recently delisted some of the crypto assets. What would give you comfortability to relist some? Is it some of these ongoing suits maybe with Coinbase that need to get resolved? Any clarity there?
Yeah, I think that it's hard to say what specifically we're waiting for to give us comfort. I think that rules, rulemaking, court case data, that all helps. And of course, we'll continue to push for regulatory clarity, because I think it would be a shame for the innovation that we've been seeing in crypto to be co-opted overseas. I think it's very, very important for the U.S. to remain a leader in every new technology and industry that we possibly can.
Yep, agree with that. Thank you. Appreciate it.
Thank you. One moment for our next question, please. And it's from the line of Ken Worthington with J.P. Morgan. Please proceed.
Hi, good evening, and thanks for taking the question. One of the footnotes in the release today talked about ACATS in and out, and you mentioned getting inflows from former Ameritrade and E-Trade customers. I'd love you to compare and contrast where ACATS to Robinhood are coming from generally, and where ACATS going out of the firm are generally going to. And then you mentioned the 1% match. When did that go into effect? And then maybe lastly, what sort of ACAT activity are you seeing from firms that are more traditionally known for active trading? Thanks.
Yeah. As I mentioned earlier in the call, we have been seeing elevated ACATs from the firms that are going through integrations. I mean, the active trading firms, TD Ameritrade has been very strong with active traders, and we've been seeing really healthy and growing inflows there. The 1% match, as you probably know, that started out being a retirement offering. We've expanded it to ACATs in taxable accounts, and I think that's currently in the process of rolling out and being communicated to customers. So it's pretty new, but what we're seeing there has been really, really good. I think that just gives customers an added incentive, the ones that were already thinking about it and using Robinhood to consolidate their assets here. We've been really happy at the trends there.
In terms of the more active trader locations, the ins and outs are actually pretty modest overall, so nothing really to call out there.
Okay. And then, so you've got ACATs going out as well. Are they going to the same firms where you're getting assets coming in, or is it a different sort of set of firms where clients are heading out towards?
Yeah, it's really pretty broad-based across inflows and outflows and common firm names, as you'd expect. Okay. One thing we like is that the trends are improving for us as we continue to improve user experience.
Okay, great. Thank you very much.
Thanks, Ken.
Thank you. And we have time for one more question. One moment, please. And it's from the line of Benjamin Budish from Barclays. Please proceed.
Hey, this is Chris O'Brien on for Ben. I wanted to ask you about the options take rate. Looks like it came down 4 basis points or so quarter over quarter. Is there anything you can share regarding the drivers here as to what's driving the change in the take rate?
Yeah, so first of all, the take rate was 41 cents. This quarter. There's two primary things that go into the take rate that we realize on option contracts. What I'd point you to, it's volatility, and then it's also mix of contracts. Specifically, we're seeing increasing mix as we have for some time now of SPY contracts. Over individual name contracts, and that has been a headwind for us on the take rate.
Okay, very helpful. And I also just wanted to follow up on the international expansion. When we think about the launch of the UK product, like what kind of products will be available on day one? How long of a ramp will it take to kind of fully get capabilities up to something like we might see in the US?
Yeah, I'll field that one. So I did mention that equities trading, in particular, a 24-hour market, will be available at launch. In terms of the other value props, I again would rather not run ahead of the announcement. Like we'll find out very soon. The benefits of doing our international expansion organically is we can leverage the same platform. That's why Robinhood 24-hour market is available at launch. It's all on the same platform. So there's really no technical limitation to making our services available anywhere that we operate. It's all just a matter of licensure and making sure that we have the appropriate licenses for all the different products we offer. And I think you're really going to start to see the organic strategy paying dividends as we continue to expand across multiple jurisdictions, and we add things here in the U.S. and we connect to different market centers overseas. You'll see that the value accrue both to our U.S. customers and the customers in new jurisdictions.
And Chris, one more follow-up on the options take rate. We've seen that mix continue into October and actually accelerate just a little bit, and the take rate moved to 39 cents a contract in October. We'll see how the rest of the quarter plays out, but thought I would highlight that for you.
Awesome. Thanks so much. Appreciate it.
Excellent. Thank you. One moment, please, for one more question. It's from the line of Michael Cyprys. Please proceed from Morgan Stanley.
Oh, hey, thanks for taking the question. I was having some technical difficulties with the phone before. So not sure if you answered this question just around index options. I think you had mentioned previously that was coming in the first half of 24. Just wondering if you had a more specific update there that you could share. And just more broadly on that, I was hoping you could maybe share your thoughts around the opportunity set, how you see that playing out with index options. Thank you.
Yeah, I mean, one of the things that we're focused on our path to being number one in active trader market share is systematically going through all of the product gaps, making sure that if customers want a particular asset, that we make that available. This includes index options, things like shorting, multiple account types like joint accounts. There's just a long list of things that we're prioritizing and building. As for index options in particular, right now that's slated for about mid-year 2024.
Got it. Okay. And then just a follow-up question, if I could, just on advice. Just curious if you're thinking about the opportunity set there for providing customers with financial advice. How do you think about where there's sort of space in the marketplace? What are the pain points that you might look to address? And how do you think about what the right level of pricing should be?
Yeah, these are important questions. I think what I can tell you is that Robinhood has historically been like a company that values the individual and their autonomy in making decisions and controlling their finances. I think as a self-directed platform, one of the things we prided ourselves in is putting people in the driver's seat and in control over their finances. And I think as we think about advisory, we definitely don't want to build another Me Too robo that just puts you into a basket of ETFs and does tax loss harvesting and things like that. We think there's a real opportunity to give customers the type of high-end financial advice that if you're the CEO of a company or a high net worth individual, you could get by paying a lot of money. Except we want to offer that at a really attractive price point using modern technology and make that available to everyone. So that's kind of the ethos behind the product, and we'll definitely share more as we get closer to unveiling that.
Great, thank you.
Thank you. And this concludes the Q&A period. I will turn it back to Vlad Tenev for final remarks.
Yeah, thank you, everyone. Very excited to have you listening to this call. And we're only at the beginning of our journey. So much more to build. So we're going to get back to work. Thank you.
Thank you all for joining. You may now disconnect.
There we go. There is the earnings for Robinhood tonight. And I can tell you now, my reaction to that is I am all in. I bought more, just bought another 100 shares at $8.85. There's huge overreaction, huge opportunity here. And what I liked about it is we still have so many, I'm going to use the word silly, investors that are still very angry and silly with Robinhood over the GameStop. Couldn't care less, to be honest. Those people are leaving, as we've seen. The monthly users have gone down, but the ones that are in and joining are much bigger accounts. We're getting rid of the rubbish and we're replacing it with the real investors, which actually is good. So what we've seen people dump the stock, short the stock again tonight. And I have just bought another 100 shares at $8.85. And as we heard from the investors there, they were happy with it as well. I think people are missing out, and that's fine. We're just a few weeks away from the UK launch. It's going to be great for the stock. And if we look at the some of the headlines here, it's quite ridiculous that the stock is down. Actually, to be honest, let's have a zoom. Let me just zoom in here, and I'll just share some of the highlights that I picked up on this. Shares are trading lower in the after hours, as you can see, from the company's third quarter results. Here's a look at the metrics. Q3, 467 million, missed the estimates of 478 million, but it was a beat on earnings. Earnings per share, 9-cent loss regarding, as opposed to a estimate of 10-cent loss. So we actually beat on earnings tonight. That was the key takeaway. And as I said, if it wasn't for one particular thing, we'd have actually been considerably up, which is a one-off event. So we're going to see a much better earnings next quarter. And of course, we've got the launch of the credit card, and which will be a big earner. Plus, we've got the launch of the UK in just a couple of weeks. So I like it. Robinhood said total revenues were up 29% year over year. Monthly active users decreased 16% to 10.3 million. And as I say, as far as I'm concerned, if you go on Reddit and you see the sort of negativity of Robinhood, those gamblers and shorters and all the rest of it, they're not investors, and I get so much of this on my channel. I am very happy to see those people leave, to be quite honest, because they'll be back when the bull market comes again anyway. But I'm not bothered about that. I'm interested in that the revenue for investors that are on the platform is increasing. That so, in other words, a higher quality of investor is moving in on Robinhood, and I like that. A higher quality of investor and user is moving in on Robinhood. I repeat, I like that. So that's okay. Average revenue per user increased 27%. As you can see, the average revenue per user has increased as well. So the users that are the customers that are using Robinhood are spending more, buying more, like myself, investing more, getting involved. I've just bought another 100 shares of Robinhood. So let's get rid of the riffraff, get rid of that, and get in the real investors. So I'm okay with that. Total assets under custody increased 34% to 87 billion. Net cumulative funded accounts increased by 360,000 year over year to 23 million. As you can see, we're getting better quality investors. We're getting more money from those investors coming in. I like it. I bought 100 shares, increased my position. Robinhood ended the quarter with 4.9 billion in cash and equivalents versus 6.2 because they don't have the users' cash. I used to have cash on hand, and they had that money. Now I'm invested. Remember, if your cash isn't uninvested, there's no cash for them to have. You've bought shares with that money, so that makes sense. Robinhood ended the quarter with 4.9 billion in cash, equivalent to 6.2 billion in cash the prior year's quarter. It's been nearly 10 years since said. Oh, you've heard this from Vlad Tenev. I don't need to repeat that. But I am happy. I have got no issue with that at all. I am all in, and I've just added to my position, and I've just bought more at 8.85. It might go slightly lower in the morning. And I'll buy another 100 if it goes down to 8.50. So I'm fine with this. I got no issue. I think it's a typical Robinhood overreaction from its investors, and I'm glad that those investors are leaving. We're getting better quality investors, higher revenue investors as well. The UK launch is going to be great, and so is the credit card. So let's see what happens. 8.84 now. Is it going to go much lower? Well, it's a good low. If we go down and have a look, you can see that it's the 52-week low is 7.57, but there's no way it's going that low. That would make no sense. And if it did, I would just keep buying and lower that average until I literally destroyed the average and brought it right down. Let's have a look. Let's read some of the comments. Let's have a look. Pete Barker just said, this UK release is going to be huge. Bought another 30 at 4.83. I wish. Sorry, 8.83. I'm so ready to buy more shares. I hope it stays down. Can't buy until tomorrow or Thursday. I would now, but I set weekly limits to the amount I add to Robinhood. That's fair enough. Very sensible. Now with 100 shares at 884, I've now got 251 shares. Now we're looking at. I'm now putting the checkbook away, says Pete Barker. The one thing I did not like about Robinhood was I used to have a custom cash card that was the American flag. Besides that, they had a multiple choice in design. Now it's just green, and I had to switch. Well, that's just a personal thing, right? That's not important, is it? But that's nothing important. No, there you go. Towards a company, just a preference. No, I get it. I just said that before I saw your comment. Can imagine space overreact to earnings tomorrow. It can do what it wants. Doesn't bother me. Hood is good. Yes. I remember in 2021, everyone was saying that Robinhood. I remember in 2021, everyone was saying they robbing the hood. They robbing the hood. Oh yeah. Yeah, I remember all that. Go get some rest, Martin. Long day. It is indeed. It's got a long week ahead of me as well. So going to be a lot going on. So there you go. There's my Robinhood reaction. I've just bought more. I'm perfectly happy with that. I've just added another 100 shares to lower my average. And it might go a bit lower. I'll buy another 100 shares. I don't care, because at the end of the day, I know this is a good company at this price. All right. I said if it went down like this, I would buy it, and I did what I said I would. Right, okay. We're going to wrap up. I think that's it for now. I think we're all done. Yep, it's holding at 885. Let's see if it goes up anymore. But if not, that's fine. All right. It says Seth Houston. What's my prediction for Robinhood? Well, it's obvious, really, isn't it? I mean, you look at the balance sheet, you look at the numbers. The users are down, but the users we don't want, the type of users that are leaving, we don't care. Quite honestly, I tell you one thing they didn't even mention, and I'm sure you've all thought about it, is when it goes into the UK in a few weeks' time, how many people are going to want to buy shares in the UK of Robinhood? It's obvious, right? If you enter into a market and you are in on that stock, I would say if you're using that brokerage, one of the things that you're going to more likely to do, not necessarily, but more likely to do, I would imagine, is to buy the company that you use. That's one of the reasons why I did it. If I'm using it and love it and think it's great, why would I not want to invest in it? So you're going to suddenly get millions of customers thinking, I'm going to buy the stock. Makes sense, right? I mean, it does, doesn't it? Anyway, there you go. Robinhood, I'm okay with that. I'm going to get off. Thank you for joining me. We've got to get off. We are here in the morning for the opening and closing bell. Yes, they're coming in a couple of weeks. Tomorrow, we got the opening bell, closing bell, Robinhood earnings. Sorry, not Robinhood, Virgin Galactic earnings. It's going to be a big, big day. I will see you all back in the morning. You can see it starting to go up. I've just bought some. If it goes a bit lower, I'll buy some more, but I'm okay with this. Let me just make a... in fact, I didn't do it, did I? No, I'm going to leave it. I haven't got time. There's only so much I can do in a day. But anyway, I'm going to leave it. I was going to do a reaction then, but I haven't got time. All right, guys, thank you ever so much indeed. I'll see you all back in the morning. Thank you very much for being here. We have to roll the credits because we had some wonderful gifts during the show. So we have to recognize that. Always do. If you did a super chat in the show, you're now going to be a star of today's show. Roll the credits live. Let's get straight into it. Here we go. Stars of our show, and I appreciate you so much. Super chat. Capital Gains gave me a super chat tonight in the show. I really appreciate that. Every penny goes to running this show and supporting this show, and it means the world to me. It really does make a huge difference, and thank you again for that, Capital Gains. Thank you ever so much, everyone who joined me. Join me in the morning for the opening, then closing bell, and then, of course, Virgin Galactic earnings. It's the big night on our channel. We're very much looking forward to it. And that's it from me. It's never a very popular earnings, Robinhood. I know it will be, though, when people join in the UK. When we get rid of all those people that tried to short GameStop and all of that nonsense, and all that, they got upset with Robinhood for doing what every brokerage did, but only Robinhood had that mentality of investors. The more mature investors were on Schwab at the time, and Ameritrade and stuff like that, and Merrill Lynch and all the rest of it. Whereas Robinhood was full of young investors who all got funny about Robinhood, joined a band of merry men, dumped it. And since then, we've seen the stock price go down and the company continue to grow. So I like it. It's a great opportunity for real investors. And I look forward to a brand new audience in the UK and in Europe. We won't have that issue of GameStop. They'll all be joining in, buying the stock, and up we'll go. And I wouldn't be surprised if it 4x's when the rates start coming down. That's why I've been buying it. That's what I believe in the company. And if it goes down to 850, I'll buy another 100 in the morning. That's it from me. Thank you very much indeed for joining me. I hope you've enjoyed today. It's been a lot of fun. We've had a lot of fun on the channel, but now it's time to get out of here. That's it. Tomorrow morning, it's the earnings. Don't forget, if you've not used my referral yet for Alpha Spread, go ahead and do it. Here's my referral. And don't forget, if you are a member, take advantage of this membership video, which will give you a 10% lifetime discount, which makes my membership free. Until then, as always, take care of your money, take care of your crypto yourselves, and each other. Bye-bye for now.